G'day everyone, welcome back to Pete's Investing, June 1st, 2023. This is the Euro-US currency update. On our weekly chart, you can see there it was in an uptrend and it's broken into a neutral positioning, so we're seeing a bit of a decline at the moment and we may see further declines in the coming days, but the weekly is currently showing a neutral positioning based on our CCI and moving averages on the price chart. On the daily chart though, we've got these key resistance at 11076 and it bounced off that and it fell below this level of this diagonal ascending line. It's broken through that, and since our last update we did draw this channel, and that was as a response to this bearish divergence on the CCI versus a bullish divergence on the price chart. So we did draw this channel in the last video, and we said if it breaks below this channel, look for it to hit this initial target area. And it actually has done that just with that wick on that candle. So we may see further declines, in which case it will probably fall below this area. Now, that on our last update, that was a key area of support based on this Fibonacci between this range, because it was a 61% level, and whenever it breaks below that, it's usually a potential, more often than not, it's a potential change of direction of the chart. And in this case, it looks like it's breaking into a downtrend more substantially. So A, it broke below the 61% level, and B, it's also hit now our target area, which we put in last video. You can also see on our indicator down here, combining the CCI and the moving average of the price chart, it's in a bearish signal, so predominantly bearish trades to be taken. And like I always say, to be more confident, wait for the weekly and a daily to align before taking trades on the lower time frames, but you can also trade with the daily indicator broken to the downside as well. And what I've got on the hourly chart, I've got these two back tests with the long positioning and short positioning. You can see here, while the price was declining, that would have been a nice profitable area to take short positions only, and that's where you would have seen an impact on your account had you gone long during that period. Then subsequently, when the price started rising, the profitability of your long positions rose and eventually broke even. Again, we don't take stop losses, we use the average down approach. So even if you had gone long using our approach, you still would have broken up with a break even, or actually broken up. You can see there the profitability was 4,580 had you taken those long positions over those most of 2022. But we're not suggesting you do that. We're just saying if you get caught out and you do follow that, it's a pretty risky thing to do, but just be mindful the average down process does work. Likewise, going short during that period, as I said, you would have been profitable and you would have stopped taking short positions there. Now, how do you do that? As I said in the beginning of the video, you take predominantly short and long positions based on the direction of the daily and preferably the weekly as well. So again, during this period, you would have taken long positions during that period there when the daily was long, and during that period when the weekly was long as well. So again, you could have taken short positions during that period based on the daily only on the lower time frames, and avoided going long during that period on the daily. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page, where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in the next video.